Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden messages in corporate filings. Today, we're re-diving into a filing that looks like a pretty standard update, but sometimes even the smallest filings can tell a big story, especially when it comes to, well, let's just say a company getting a quick cash injection. Stick around because we're going to break down exactly what this means for Applied Energetics Incorporated, and whether this quick cash is a sign of strength or a desperate move. Before we dive in, if you are like me and enjoy getting straightforward insights from these official documents, please hit that subscribe button. And for more in-depth discussions and real time alerts, join our Discord community. The link is in the description below. So Applied Energetics Incorporated filed a Form 8K, which is usually for big unexpected news. In this case, it looks like they've been busy behind the scenes raising some funds. They completed a private sale of nearly 6 million shares of their common stock. Think of it like selling small pieces of the company directly to a few select buyers, not to the general public. They sold these shares for $1.80 each, raking in a little over $10.7 million. Now, they also mentioned something called pre-funded common stock purchase warrants. This is a bit technical, but basically these are like promises to sell shares later at a very low price. It is a way for investors to get a stake in the company right away without fully buying the shares yet. The catch here is that these particular warrants have a limit. They can be used in a way that would let the buyer own more than 4.99% of the company's stock. This is a common tactic to avoid triggering certain reporting requirements that would kick in if someone owned a bigger chunk of the company. The important part here is that these sales were not to the general public. The company says all the buyers were accredited, sophisticated investors. This means they are considered financially savvy and wealthy enough to understand and handle the risks involved in this kind of private investment. This also means they are likely relying on an exemption from registering these sales with the Securities and Exchange Commission, which is allowed under a specific section of the Securities Act of 1933. It's like saying, we're reselling these privately to people who know what they're redoing, so we don't need the full public offering process. It is worth noting that the company has agreed to try and get these shares registered later, meaning they might become available to the public down the line. This often happens when companies do a private placement and then want to be able to sell more shares openly in the future. Now, this filing also lists some exhibits which are basically supporting documents. The most interesting one here is a press release announcing this very private placement. It gives us a little more context, highlighting the completion of this $10.8 million private placement offering. So, what does this all mean? Applied Energetics Incorporated, a company in the potentially exciting but often volatile world of energy technology, needed cash. They got it by selling a portion of their ownership to investors who are likely betting on the company's future. This is necessarily a bad thing. Many companies raise funds this way to finance new projects, expand operations, or simply cover operating expenses. However, the fact that it is a private placement suggests they might not have been able to raise this capital through more traditional public means at this moment, or they perhaps chose this route for speed and flexibility. Looking at the bigger picture, Applied Energetics is in an industry that demands significant investment. Whether it is developing new energy solutions or scaling up existing technologies, cash is king. This private placement provides them with a much needed financial boost. The key question any investor or observer should ask is, what will they do with this money? Will it be used for research and development that could lead to a breakthrough, or will it simply be used to tread water? The restriction on the pre-funded warrants, keeping buyers below that 4.99% threshold, is a classic move to provide funding without immediately granting significant control to any single new investor. It's a way to bring in money while maintaining a degree of strategic flexibility. From a Warren Buffett perspective, we'd be asking about the intrinsic value of Applied Energetics. Do these private investors see something in the company's long-term prospects that the broader market might be overlooking or even ignoring? This type of placement can be a signal. Accredited investors often do deep dives, so their willingness to put capital into the company is a vote of confidence. However, we have to remember they are rewarded for that confidence with a potentially higher risk. In conclusion, Applied Energetics has secured a significant chunk of money through a private sale of its stock. This action provides immediate financial relief and resources. The company's direction will depend heavily on how effectively they deploy these funds. The move itself signals a need for capital and a belief from sophisticated investors that the company has future potential. The risks are always present in this sector, especially with new technologies, but the opportunity for growth is also clear. Alright, that is our breakdown of Applied Energetics Incorporated S latest filing. What is your take on this private placement? Are they building for the future or just buying time? Let me know your thoughts in the comments below. If you found this dive useful, hit that like button and make sure you are subscribed for more unique corporate insights. And don't forget to join the conversation on our Discord, linked in the description. Thanks for watching, and I'll see you in the next video.